What's going on, traders, and welcome to this week's episode of the Weekly Watchlist. Before we get going, I'd like to make your attention to the newsletter. If that's something you're interested in, receiving 5 to 10 swing trade ideas or just stocks in general that I think will move this upcoming week, feel free to go into the description of the video, find the link, and put in your email address there, and I will promise you that email shows up in your inbox at some point this afternoon or tonight. Without further ado, let's get into the Weekly Watchlist, where I do a technical analysis and give you some of my thoughts on the tickers. Here on the left, we have the broad market and then some companies to get into. So as always, let's start off with the SPY weekly chart. Alrighty, if you're watching the SPY weekly chart, it's no surprise to you where we bounced. If you look back in 2018, we have our triple top, 1, 2, 3. And then as we moved into 2019, seeing a little resistance here, and then it turned to support once we got above it. So no surprise seeing where this sort of move sort of ended, especially lining up with that 50 SMA on the weekly chart as well. Providing great support here. If you got in around 281 on some swing calls, congrats to you. If we look down below, we see volume is substantially larger than the previous weekly candle, which is a good thing. We want to see the green buyers stepping up, just to really confirm that the move is strong in one way or another. So we'll zoom into the daily. Looking at the daily, you can see this big gap down has been filled by this candle, and I would consider these two very close wicks as no gap here in the chart. Considering the wicks are so close to being overlapping, I wouldn't consider that a true gap. Friday's candle is a red hammer off of our lower support trend line, and you can see we're still getting rejected right around that 50 SMA on the daily chart. So one thing we're looking out for is a break of that 50 SMA. If we can get above it, that level is right around 293. 293, the whole dollar, just about somewhere in that area. If we can get above that, then we're going to target our next swing resistance here at 296.30. That comes from here. So that's on the upside. If we do see another collapse and another move down, which I don't think we will based on the structure here, then we're looking at our lows in here to continue to hold up and sort of provide some structure on the low side. Looking at the QQQ daily, same thing. We can draw in our sort of support trend line that we've developed from here into something like that. You can see we're holding that quite nicely. Again, we want to break above that 50 SMA, but our next key resistance is really going to be this level in here at 188, just based on the high of this day here instead of that 50 SMA. So if we break through that, look to target this, and we would have to break through that in order to see the next one, obviously up here at 191.26. Anything on the downside, we're looking for this 182 level. Not really. Actually, let's just get rid of that. We'll remove. Instead, we see better structure. I wouldn't be surprised to see some sort of stop in action right around 183.69, 184, somewhere in the range of these highs here. And then anything after that, we want to see this support trend line hold up. AWM's pretty interesting. We do see a little bit more of a gap in the chart here instead of we had the gap fill and then no major gap on the other two indexes. However, there's a bit more of a difference here that the gap could get filled. So potentially targeting this area as a place on any sort of pullback. You can see our candle isn't as bullish as we had in the other indexes as well. There's much more of a red body here instead of more of a hammer candle. So the 200 SMA on the daily is trying to act as support. You can see we're below it at this point. So I think maybe it's more than likely we come back down, test out 149, 150, even the whole dollar psychological number. That might be something in store for Monday based on the shape of this candle. Anything lower than that, we again can get rid of this. That's sort of mid-body of those candles. And instead look to target some of the lows in here. So if you want to just split the difference and call it somewhere right around 147, I would feel safe doing that. Could stop a little bit before, or it could stop a little bit under. Somewhere in this general zone, we want to see that support kick back in, and again push prices in the upwards direction. IWM just sort of, again, getting stuck in this chop up and down, not really showing us any solid direction yet. And again, I think we're going to have to wait until it really breaks out one way or another to determine which way it's going to go. One reason why I think that the market does want to continue to just dribble higher is because we saw this big volatility spike, and now it's just sort of crumbling back down. I wouldn't be surprised if we come back down into the $15 range, see a little bit more spike, which might, culminate as a result of another move down in SPY or the market in general. But again, volatility really collapsing here after that big move up. As prices continue to grind higher, I imagine this will just keep getting lower and lower and lower. Keep an eye on this. It'll sort of be a gauge as to how fear is acting in the market as we go forward. Already hopping right into our companies, we're starting with Apple. You can see we have an indecision candle here right off of our 50 SMA, as well as this $200 whole resistance-ish psychological level. This to me is, again, indecisive as the candle is on lower red volume as well as decreasing bullish volume, so I'm not too sure which direction Apple wants to go based on this little downtrend and sell-off in the market. Again, it looks more like a move down to me. However, the market, as I mentioned, looked like it might want to go a little bit higher, so maybe Apple wants to continue a little bit higher as well. If so, target that 205 resistance we have in here. If everything starts roaring again and we start moving in the upwards direction nicely, possibly 208, 210. On the way down, we have 195 or hopefully our 200 SMA and some of these lows in here to offer some support instead. So that is going to be right around 192. 200 SMA is continuing to move in the downwards direction. I imagine it'll start to coincide with this support trend line. If we do get nasty and get into that, it would be a buy for at least a little intraday bounce on my part. Netflix, again, showing a little bit of relative weakness compared to the hammer that the market put in. We don't see that nice move up as we did in some of our indexes. We do have a nice hammer right off of our support down here, so that was nice to see. If we do get back down into that level, I wouldn't trust it the second time around, considering how perfect this one was. I would look for a breakdown below that $300 mark. Anything on the upside, if we see that sort of rally, we're looking at 320, sort of break out of these highs that we're seeing in here. If we can get above that, we're looking to target this, basically the high from the gap down, if that makes any sense, here at 330. We're looking to target that, and then our 200 SMA and this resistance level in here will certainly come into play. Let's get rid of this one. This one is certainly more prominent and makes more sense. That's right around 336. So keep that in mind on the upside. Again, on the downside, $300 and 296 on the downside. All right, as you saw there, I scrunched up, and it looks like we have 274 as our next level if this 296 does decide to give. Tesla is starting to form a nice little double bottom here right at the 50 SMA, which is a cool thing to see. If we see this next sort of higher low start to be put in and we see another move up, that would be a good thing. The next thing we need to see is that higher high. So the key here is to put in a high that is greater than 246 here. If we can do that, then I would say the uptrend is still going to be intact in terms of just the way we're moving, what direction we're going. This is sort of a downtrend if you would consider this big gap down, but we are starting to push up again. As I said, the nice double bottom. Next thing we're looking for is the break there. Anything if we break down below 221, then I would consider that bearish rather, and potentially prices going back down to 207. God forbid that breaks. We're looking at 179 on the downside. On the upside, a really ambitious target would be a gap fill up here. That would be all the way up to 265-ish. Again, that's the high of the candle. You could call it the bottom here at 257.97 as well. Alrighty, Baba, although all this trade war stuff is going on and devaluing of the yen and whatever, and it's a Chinese company, doesn't matter. To me, this is bullish. You can see we had this big sell-off. However, we didn't quite get down into our lows from here. We have a higher set of lows in here, as you can see. Quite gappy. Baba chart is known to be really choppy and hard to sort of look at. Doesn't really make an easy chart to look at. So we are in a current uptrend, I would say, based on putting in a higher low than here. We do want to see this hold. If we get back down below it, I would consider that uptrend or the beginning of this uptrend sort of destroyed. The next thing we need to see on a longer term horizon is a move all the way back up to our highs to put in another higher high. Consider this area up here as 165 as key resistance. See our two moving averages sort of converging here. Definitely going to be a tough one for the bulls to sort of puncture through. We have all this red volume, green volumes sort of lacking, if you will. I wouldn't really be too hard pressed for a move up unless we really see that green volume flush in. Facebook, a great one. You can see there's no real gaps. We had the gap down, filled it nicely, and everything is moving smoothly from here. We do have support coming back into play at our low here. You can see that's right where we stopped with Friday's candle, which is a beautiful thing. Again, breaking the 50 SMA would put us back into our swing high range. That's 198.36. If we can get there, that would be fantastic for Facebook. And then after that, on the downside, we would want to see this level act as support again. There's sort of nothing really structurally. I guess you could call this level in here a minor resistance on the way up. That's right around 194.26, 195. Keep that in mind. Maybe a little hiccup on the way up to our swing high at 198. On the downside, we do want to see our level here act as support. Certainly on any sort of retest of that area, that's going to coincide with our uptrend, so keep that in mind as support. NVDA just never doesn't fail. It always tends to respect the lines that we've drawn. You can see resistance very clearly. Broke above. Now it's trying to act as support. It's just sort of consolidating around this level. I wouldn't be surprised if we see a gap fill to the low of this candle. Just another little push. If we can break above the high of day on Thursday, right around 158, then I wouldn't be surprised to see about $1 gap fill, 159 to the low of this doji here. So that's on the upside. Again, that's going to kind of coincide with our resistance trend line. That's going to be an important one. As you can see, we had the fake break of it here. Back below, it's going to be really telling what happens as we get into it this upcoming week, if we get into it. Again, 200 SMA coinciding with it. On the downside as support, clear level here that we're seeing. That's right around 149, 150. You can see that's sort of where this little bounce is sort of culminating from. Get rid of this one. That's not quite as important. I would say our next support below us is going to be more around this level, 142.59. ROKU had a killer ending to the week. We had earnings and boom, beautiful move up. One thing I posted about, if you're looking at this and you saw ROKU start to consolidate around this area for earnings and you got in on calls or you bought some shares or whatever and you profited from the big gap up, congratulations to you. That's technical analysis beautifully working out in your favor. Of course, earnings is always some sort of a gamble, but this is just one more feather in your cap, if you will. In terms of confidence in making that move up. So right now I'd say we're more than due for a bit of a pullback, even if it's to our highs, to sort of validate that level. You can see there's some sellers hanging out way up top. That's no surprise because we're in blue sky territory. Right around 128, the whole dollar mark is sort of where those sellers stepped in. So keep that in mind on any sort of pushback up into that level. That might be a good place to catch a little bit of a pullback. If we do start to pull back again, looking for support to come into play at 113. Microsoft, again, trying to get back up into its trend line, which it's been following quite nicely. Because we're below it, I recommended a nice buy. If you did, boom, nice little move in the upwards direction for you off of our support zone here at 131. So that was fantastic. I'd look for resistance to come into play at any of these resistances marked out above 140. And the high right around 140, 150. As we get into this level, it's going to be due for a bit of a consolidation sideways motion, pullback even off of that level. So keep that in mind on the upside. If we see a rollover here instead, looking for the 50 SMA to act as support on the downside, sort of coinciding with this 134 level. If that doesn't hold, then this is really what does need to hold, and that's 131.31. If we break down below that, then I would say the uptrend is beginning to deteriorate. We wouldn't be able to put in a higher high and higher low after that. So really key level here at 131, and we do need to start putting in a higher high to continue the uptrend. AMD had a really exciting Thursday, Friday. As you can see, the big gap in the chart, again, sort of getting rejected at its all-time highs here. No surprise really where the price is closed. Lots of sellers hanging out up here. You can see that now becomes a 1, 2, 3, almost quadruple top, depending on how you want to consider this wick of the candle. I'd just consider the close there below that level, the quadruple top there. So maybe some selling, a pullback to come in off of this massive move up, but you can see the green volume is really there to support it. I'd be careful shorting into this, just because you never know when these when people are going to stop hopping on the emotion train and keep pushing prices up. So if we see any sort of pullback, maybe it might be a buy for a continuation, but I wouldn't really recommend shorting this and trying to get a gap fill or anything. That'd be way too ambitious. Instead, look for support to come into play from our trend line. If that gives 50 SMA, anything after that, it's going to get kind of nasty down to 29, almost $30. We'll call it $30. But if we do see another push up, let's just draw in our second wave of resistance, which is sort of right here around 34.81, so a little bit higher than where we closed, and then obviously our high here at 35.55. McDonald's has been another one, just like Microsoft, hugging that trend line, just beautifully reacting and getting back up to it. Again, I mentioned the relative strength of McDonald's compared to the market. It didn't really sell off as hard as the market, so that to me was a bullish signal. And of course, we saw a bullish week here and follow through up to our trend line. Might be time for a little pullback, a little bit of sideways action consolidation. Again, this one's just continuing to grind in the upwards direction. I wouldn't be surprised to see a little pullback consolidation, find support here at 214, another nice move up. Or a continuation off of here, and then a pullback consolidation to 219. So something like that, more than possible on McDonald's. All our levels are mapped out for us on the upside, whole and half dollars. Amazon did its gap fill and then saw a gap fill reversal. So interesting play here. If you got in on the retest or back test of the trend line as a short, that would have been a nice play. You would have profited nicely there on Friday. If we see any pullback, we are looking for this area to again act as support, just because it's our 200 SMA and price level at 1747. If we see a breakout to the upside, we're looking for resistance to come into play at 1875, then the 50 SMA. Our lines are starting to get a little random and sporadic, so we're going to get rid of some of them. We clearly fell right through this level. Boom. 50 SMA is acting as resistance here. As you can see, resistance, so keep that in mind there. Anything after that, it would take quite a lot of effort to get us back up to 1964, but if we do, that is an area of resistance based on some of these lows. On the downside, again, we covered 1747. Anything after that, we're looking at our low from this set down here, which is 1673. Alrighty, that's going to wrap up this week's episode of the Weekly Watchlist. If you enjoyed the video, give it a thumbs up. If you learned anything or have any questions, let me know down below in the comments section. Or if you enjoyed the video and you want more of this content, head on over to the channel and hit the subscribe button. Greatly appreciate that. Again, the newsletter is available for those interested, and as always, have a green trading week.